So, as reported, 9.7 million barrels of production, of output cut per day. But then we also got this tweet from President Trump saying that that number could be more like 20 million. I guess starting with the 10 million number, is that enough? And could it actually climb to double that?
Well, if you think about what the demand contraction has been since this crisis started, you're looking at about 25 million barrels a day in terms of lost demand. Now, we expect that demand to come back once we're through the crisis, but in the short term, we need, obviously, for there to be less oil in the market. And so, of course, the news over the weekend from OPEC was welcome news. But American producers have already responded to this. We expect that oil production in the United States is going to be down by 2 million barrels. That's down 2 million barrels from 13 million barrels in February a day. So as a consequence of that, we think other producers throughout the world are going to continue to respond to market demand concerns and cease production.
Yeah. Do you think it's a moot point here or argument that the government should be stepping in, or regulators in Texas, federal government, either or should be stepping in to actually impose cuts when you're actually already seeing the private sector do so?
Absolutely. In fact, what happened this weekend is a perfect example of that. When you have a cartel system in place, it actually responds not to the market, but to what government wants it to do. So that's why we would oppose any kind of a quota system in Texas that would mimic OPEC at this time, because it wouldn't respond as quickly as markets are. American producers are already responding to low prices, and they're cutting their production. And we believe that that's the best answer to what is going on within the oil markets today.
Mike, it's Dom here. You know, the last time we spoke earlier this year, WTI crude oil was about $50-some a barrel. We're more than half. I mean, we've lost half that value in that time. How much distress is going through the U.S. shale patch right now because of what's happening with prices? And is it going to be a factor in terms of the way that the industry moves in the coming months if we do emerge from coronavirus?
Yeah, this is a really tough time in the oil industry. Of course, we've dealt with supply shocks before, we've dealt with demand shocks before, but we've never dealt with them at the same time. And so I think there is a lot of concern in the Permian and throughout the country because prices are so low. And so, of course, we really welcomed and appreciated everything the President and Secretary Briette did over the weekend to get to a negotiated settlement with OPEC. But you're going to continue to see supply go down as a response to price here. In the meantime, American producers can take advantage of some of the facilities that have been set up by the Fed and the SBA to meet some of the short-term liquidity challenges that they're going to have through this time. But you're starting to see rigs being laid down within these resource basins. And, of course, we're very concerned about producers during this time and trying to help them through with some of the things that we're doing on the regulatory side with the federal government.
Mike, you've got your fingers on the pulse of the oil industry overall. What exactly is your estimate, or what does the API think in terms of how many companies will not survive what's happening right now with the economy?
Well, we don't put estimates on those kinds of things. What I do know is that the American oil and gas industry is going to be around for a long, long time because Americans are going to continue to demand these products. The economy is going to come back, and the American producers are going to continue to step up to the plate to deliver energy independence for America, because it's only because of that energy independence that the president was able to lead these negotiations from a position of strength over the weekend.
You do put out a weekly report, inventory report at the API, looking at the numbers and the builds we've seen versus the available storage. And I realize the federal government stepping in and offering up space in the strategic reserves as well. When do we actually run out of storage? Could that actually happen here in the U.S.?
It absolutely could happen. I think that is the next big hurdle for this industry. We're very concerned about what storage is out there right now. There are some estimates that we could hit that storage wall in late April or early May, but that actually speaks to the importance of the deal that happened this weekend, that we're going to have less supply on the market as a consequence and hopefully more storage available for American producers. We're working with the Department of Energy on this question right now, and they're looking for other answers to ensure that we have the storage that we need because of the glut that we're going to have in April and May.
Gasoline demand has collapsed as well. We're also seeing demand for jet fuel go by the wayside, heating oil as we move into spring, summer as well. Are there other types of petroleum products for which there actually is demand right now and refiners could be focusing their attention?
Well, interestingly, demand for petrochemicals continues to increase, and one of the reasons for that is a lot of the products that people are demanding right now in response to the COVID-19 epidemic they're all petroleum-based. The masks, the gowns, rubber gloves. So, like I said, the world's going to continue to demand these products, and this industry is making sure that we're stepping up production of those products to meet the demand as a consequence of this terrible pandemic.